Welcome back to yet another episode. This time we are going to discuss about more important aspect of investing. Buffett says we love the process more than the proceed. What does it mean? We have certain steps to buy the stocks. What are the steps? How do we eliminate unwanted stocks from our radar? That's a billion-dollar question. Here we are going to discuss about the various ways of eliminating unwanted stocks. Of course, I tell you, this is just one way. It is not the only way, and there are umpteen ways of finding stocks. It's not only eliminating unwanted stock, the scanner should also give you certain set of stocks where you can research upon. We are going to discuss about one important process where we'll have more confidence to work upon the stocks. Here it is.
Here we go to learn about the stock picking mantra. We see several M's on the screen. What does it mean? It means 6 M of investing. The first M denotes management. Management team should have a long-term vision and it should adapt to the changes. It should work for the benefit of the shareholders and not for themselves. That's the most important key aspect of management. Now, how do we know that if it is working for the shareholders or for themselves? If you examine the balance sheet, if it keeps on giving dividends, then it's working for the shareholders. On the other hand, if there are a lot of write-offs on the balance sheets, there is no growth at all, then you could see that they are not working for shareholders but for themselves. So the next M is about the moat. We have discussed extensively about moat in our previous video. We all know Warren Buffett coined the word and popularized the term economic moat, which refers to the barrier that protects a company from competition. An economic moat is a structural business character that allows a firm to generate high returns on capital for an extended period of time. When a company becomes successful in business, other companies make a carbon copy of their business plan. For example, Apple made smartphone first, and you can see that now everybody is making smartphones. There are so many instances where people who innovated disappear because the carbon copy becomes better than the original. It is most important to feel the moat. We have discussed it in detail in our earlier video, so let's move on to the next M, which is market cap. Market cap is nothing but the value at which you buy the entire company. It's most important to catch the right company when it is young. The next M refers to the market share. Market share is the percentage of company's product or service against the total sale of a particular product or service in that region. Gaining a market leadership gives a wide visibility, trust, brand, etc. Unimaginable competition persists when you hold a lump market share. It's all the better to catch a market leader even if it is going to be in a niche market. Let's take the case of Maruti. It had a market share of over 80% in the early 2000s, and all the car manufacturers came and attacked its product from different segments. Though Maruti lost its market share, it's still a market leader. It's come down from 80% to 50%. But most importantly, because of the competition, it had penetrated the market, and now it's able to sell more number of products, which is the most important thing. So we don't have to be worried about the competition, but as long as our company remains as a market leader in the business, it's very good. The next M is market, which means the position of the market indices. In a bull market, most stocks will be overpriced, whereas in the bear market, most stocks will be underpriced. One have to evaluate the stance before acting in the market, but mostly retail investors come when the market is in bullish condition. As we all know that the market goes through 4 phases. One is an accumulation phase, another one is absorption phase, next is an explosion phase, and finally a blow-off phase. The explosion phase is the one which has a maximum point of risk. Unfortunately, public or the retail investors come for investing only when there is a maximum point of risk. So the blow-off phase, that's in the bear market, when there is a maximum point of opportunity, people don't look at the stock market, and that's the curse of the market. So we will have to learn certain things and then find out our way to invest when there is maximum point of opportunity. The next term is margin of safety. The last term refers to the market, which informs about the overall market condition. This M refers to the stock we select. So we will have to find out whether we are buying gold at the price of copper, which means the price we pay for a particular stock is less than its intrinsic value. As informed by Benjamin Graham, the margin of safety is always dependent on the price paid. It will be large at one price, small at some higher price, non-existent at some still higher price. So it's imperative that we pay the right price when the stock is beaten down or when the stock is at the inflection point. The 3 most important words in investing, as referred by Warren Buffett, is margin of safety. So with this, we have come to the end of this video, but we will have to take some examples to clarify how it works on stocks. So Apple is a perfect example of 6M. When Steve Jobs came into Apple in the year 1997, and we know the commitment of Steve Jobs. Apple had the perfect leadership position. In 1997, it was around $1. Now, it is around $110, $111, but it has gone up to $125 despite Jobs is no longer with the company. I am taking another example from the Indian scenario. Take the case of Bosch. It was around 200 rupees in 2002, where it has already attained the market leadership and it is well known to the world. From there, it has given a return of 9,408% in the last 14 years or 15 years. Of course, it's not that, it's only the past. We can see that. You can find several multi-baggers and you can easily find them using 6M strategy. It's time that we apply the strategy and make millions from the market. The stock market is a device for transferring money from the inpatient to the patient, and that's the most important thing we'll have to learn in this. Just to summarize the points, the first term refers to the management, next is moat, the third one is market share, the fourth one is market capitalization, the fifth is the market, and fifth and sixth may appear as same, but the fifth one refers to the overall market, the sixth one is particular to a stock. So with that, we have come to the end of the session.
Please subscribe to the channel so that you get a lot of information and you don't miss out any videos. The link to our blog is given below. Don't forget to visit the blog. It has a wealth of information and it answers all your queries. In case it's not answered, don't forget to leave your questions below. It will get answered immediately. Thank you. Have a great day.